Trade Group, and today is the first of the month, the month for May, and some whippy price action for the Fed. We've had a couple of these Fed meetings where the price action has been kind of straightforward. Where if you look back at years past, it's been more of the action like I think we kind of saw today, where the market starts to go in one direction and it doesn't always go that. By the time the press conference starts, it doesn't always finish the way that it was going, and that hasn't really been the case over the last few of the FOMC meetings, where the market has just kind of picked a direction and kind of gone with it. But if you've been around for a while and trading these Fed days, you know that the majority of them are not easy to deal with. And it's a case of like scalping as well if you're going to trade them. For a while, I do remember that some traders, like I think last year, got to the point where like, hey, I'm going to even like take vacation on this day because it's too difficult to trade. So you kind of forget sometimes, like, after you have a couple of these meetings and they are more straightforward, you forget that like muscle memory that sometimes they're ridiculous to kind of trade. So my thought was, coming into today, was that the way that we kind of started, which is not in a position of strength. And I'm going to review a couple of the charts here in the S&P. But when you start the period below the value area like this, you're not in a position of strength. Also, very simply, as I said in yesterday's market recap, is that even if you're not using volume at price and just using like the moving averages, basic, you're still going to get to the same conclusion that below the 50-day moving average is not a position of strength for the market. So you kind of have to be, in my opinion, a bit more like, again, I'm not telling anybody what to do. And of course, this video is for information purposes only, not giving out any advice or recommendations. But, I think it's a bit of common sense to be more defensive when the market is in more of a distribution mode than accumulation. And that is just easy, very easy to look at this 50-day moving average. Sorry, sometimes I talk about something and I'm not highlighting it on the screen, as I forget that you can't, you're not thinking exactly what I am. But here's the 50-day moving average. And, this is an uptrend, nice smooth uptrend. And once we break back below, the longer that we spend like not being able to recapture that, right, like more of like the sellers and more distribution is going on. And so again, you don't know how things are going to shape up, and always the closing print is most important. But this is a crazy looking doji. You could barely see the green candle for the day, but we did touch that bottom of value, right? And that's something, again, I highlight these levels every day. And pre-market, I send it out about 8:30 in the morning, I think around 8:20 in the morning, on Substack, where I talk about, as I go through multiple time frames, and I talk about, here's your resistance on the daily chart, here's what to watch. I tend to rely mostly on the daily chart during the week. I will look at the weekly chart once we get to the week, but it's tough to really make conclusions, and this was kind of, the one thing that I thought stood out last, when we did get to Friday, was that we didn't take back anything from the previous day. So you can kind of see that we're still, kind of in no man's land here on the weekly chart, because we're way above the value area for the year, but we're coming in. Right. And that candle, to me, by the time we got to the end of the week last week, on the weekly chart, was just indicating that there is no change in the short-term trend, right? And that is living up to to what an inside day usually is. So that's the daily chart. So I spend the most time there. But when I'm looking for like direction, right, or to play something in the short term, I'm definitely going to be looking at that 1 hour chart. And even on a day like this, I'm going to be mindful of the 5-minute chart, which gives me levels for the day, right? So this is the levels for the week. And yeah, I mean, this is really, really tricky, guys. A really nice strong bar like this, look at the volume on this bar, and then look at more volume as the sellers are still in control, right? And that's all that means. I think, I mean, you could read into as much as you want with the Fed meeting, and I could give a quick 30 seconds on that. I just thought that he wasn't going to really say anything new. I think the fact that he's mentioning that inflation is stubborn and is staying higher, right? But they're not going to raise interest rates. I think normally, if it wasn't in an election year, right, they would be talking about raising interest rates again. But they're talking about cutting rates because I think that they want to, basically, and the market is pricing in possibly a rate cut happening in September. I know he did get a question about this all being very political, and he denied that. But anyway, that's something that you can talk more about at a cocktail party. The price is basically all that you need to know here. And look at the volume. And again, the sellers really took control. Do I know who's doing that selling? No, it doesn't matter. It could be institutions, it could be a number of different parties. But here's how I played. My trading for the day. Here was my trade blotter for the day, and basically, I wasn't looking to do much. I always will try a couple trades, even though that, the price is below the 50-day moving average for the indices, but everything's got a stop price. And, I'm not going to trade full size either when we're in a situation like that. But, here was, and I explained why I wanted to put this, call spread in place, because I just thought that we were at a place where the sentiment was low enough that we could have a bounce, right? And then look at what I did here, right? This isn't even sometimes, and everybody wants bigger profits, right? But sometimes it's just not there for the market for the taking. And I sold this for about a double, and normally, like I did last week, right? I got a full. If we go back to last week's trades, right? I did this trade and got basically. Full profit. I did a call spread, and I'm trying to basically put more of these types of SPX option trades on. I can't find it at the moment, but I did a similar SPX call spread last week, and I held that all the way, through to the end of the week. But I didn't feel confident that that was going to take place because we're just dealing with a lot of overhead supply. All right, so we're basically back to where we started, just below the value area. And again, this is not a position of strength. So I think, for now, just staying defensive, waiting for something to change on a positive, again, like, I try to give a little bit of a positive note. Yeah. In yesterday's video saying, giving you this level, this 50-56 level was something to trade against. And, again, this market will move really quickly, but sometimes market participants do wait a day after the Fed meeting to kind of digest some of the new information. Regardless, I'll still be watching that same level, 50-56. So I talked about the overhead supply on the daily chart, the bottom of the new May value area, and also what kind of transpired here on the 1-hour chart. Also, I even posted this on Twitter, because we're basically hit this, and I said to members to basically be careful, because the dollar started to go higher too. So I've got this in Think or Swim, but it's interesting what's happening with the dollar here after hours too. But here was the dollar really moving lower, and then we started like right around this same time. So again, like, these things will kind of line up together and kind of give you like a confirming signal. But once you see the dollar start to ramp back up like that, right, that usually means like it's, so here, with dollars moving down like this, risk on. When the dollar's moving back up, it's risk off. So that's kind of the scenario that we have in play here. But yeah, I mean, that was a firm rejection there at the top of value. And same thing for the Qs. The Qs, which were showing more relative weakness for the day, also hit this top of the value area. Right, and this is going to be a little bit different looking with the 1-hour chart. Again, this is astounding to see this volume totally eclipse the previous 1 hour, and the same thing, bearish engulfing on that. So I would watch for here 419.98, or call it 420 is the level to watch there. What I thought that there was a couple bright spots, but they didn't really carry through. The biotechs today, right? And look at the microcaps today. And now there's a portion of that overlap, small cap. Obviously, XBI is more smaller cap. It's an equally weighted ETF, but look at what the microcaps did today. Right, very different than the small caps are up 1.9% for the day. Look at that. I mean, that's really bucking the trend in terms of what the other indices did. So I would say it's very tricky with Fed days. As I mentioned in the beginning of this, it does take some level of experience to know that sometimes that the price action can do it. It could be just all over the place, like it was today on Fed days. It doesn't. It surprised me as much as we did. That we gave back the whole thing, but it doesn't surprise me that the market likes to do these crazy moves on Fed day. All right. So I wanted to just bring up XBI, and I wanted to go over a couple things just to kind of wrap up a little bit. But here's what that's the wrong chart. I'm having a problem with my keyboard. We went right to basically this again. It's just funny how these things line up, like how well the resistance levels line up. But that I'm on the 1 hour chart, and that is, I think that's the value area for the is it for the year? Think that's the value area for the year. Yep, that's a value area for the year. So a nice bounce today for biotech. So this looks pretty good if we could carry through for the rest of the week. Watch this 88.94 level. Again, why is this so important? Because this is the value area for the year, right? It's based on all the activity from last year. So it becomes most significant. So always when I'm going through these charts in multiple time frames, right, the longer time frame is more significant, right? And notice that it slams right into that 88.94 level. And again, the price is just getting rejected. Anywhere it sees resistance right now is getting rejected. I want to talk about a couple positive things. So while we're watching the market do this, right? So I want to, before I go on to a couple single stocks, back to futures here, right? But while we are X out of this, sorry, let's try this again. There we go. Right. So while we are hanging here below the value area for the month, right, which is here, and the 50-day moving average, I still want to be, putting together, a watch list for earnings, right? Because really, the names that had really good earnings and a good, more importantly, a good reaction on earnings, right? They are going to be your potential leaders for the next quarter. So I have over 40 names on my earnings strength and gap list. I call it earnings gap and strength list. But I thought that this was a really nice move in TMDX today, and we'll watch to see how this, so I think this, I mean, look at the volume on this day today too. So why is that important, right, when a name gaps up like this? Because it's great for obviously institutions that are already in the name, but some other institutions that either have a small position or are not in the name are going to begin to kind of accumulate the name because they want to be in this name now that they know that they had good earnings, right? That's the way it works a lot of the time, not all the time. If the name's already overcrowded, right, then you might see profit taking into it. But you'll see a lot of times the name will just start the run. So there's names, I've got a bunch of other names like this too, but I think this is just one of those good examples. And that's basically when, as the market is more in a defensive position, more seeing distribution, right, you still want to go through the research and figure out names that you're going to participate in once this market begins to improve, because as the overall market improves, so will the individual setups. Once the distribution is kind of in the rearview mirror. All right, guys, that is it for today's video. Have a great night, everybody, and see you tomorrow.